Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply is Talks, and I'm here with another video and a very happy new year to all of you. And this is the New Year special video in which I bring to you five companies that could do extremely well over the next 5 years if you invest into them. Again, do your own analysis, etc. But these are companies large cap, mid cap, one small cap that could perform very well, and there are triggers for them to perform well. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should delve with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I am not a portfolio advisor officially. So, whatever decisions with respects to markets and investments you take, kindly take that on note that it's laden with market risk, and do consult your financial advisor before doing that. Whatever discussions with respect to stocks or markets I take here is purely on the basis of my experience into the market over the last 12, 13 years. Before I talk about these five companies, as more requested, kindly support me on Patreon. And thanks a lot for all those who are supporting me on Patreon, on WhatsApp, and on YouTube. Once you do that, it helps me grow the channel. Help you also ask me questions, seek out answers in greater detail. You'll have access to my portfolio, access to a watch list that I keep updating from 15 days to 30 days time, discussions on domestic and global economics, one long-term pick since the market is down, a long-term pick on a weekly basis that looks attractive, and whatever queries that you're having, I answer that. Now, in order to discuss about these companies, let me take you to the screener website. And to save your time, I'll just give you an idea of what are the companies that I'll talk about. So the companies here are Glenmark Pharma, Uno Minda. So Glenmark is from the pharmaceutical space, Uno Minda from the auto space, Sudarshan Chemicals from the chemical space, a company that I have in my portfolio at the moment. Surma SGS technology from the electronic space, and InterGlobe Aviation from the aviation travel space. We'll discuss about these one by one. So first of all, Glenmark Pharmaceutical, a company that was in losses because of a couple of issues that they were having in a couple of plants here in India from where they used to export to US, and they had some you can say US FDA sanctions on them, and now they have got the approvals there in by the time mid of 2024 they got the approvals, and the stock started performing before that. So from the start of the year, from March onwards, the stock started performing from around 1000 rupees, went all the way up to 1800, and has fallen from there and is recovering again. So a stock that produced and not that special results is now starting to produce results. 45,000 crore market cap, so a mid cap company, currently around 1600 rupees. uh, if you look at it on a quarterly basis, the numbers are improving. In June they did 3200 crores of sales versus 3000 crores, but look at the profitability. From 437 crores it went up to 588 crores, and in September, it went up even further, and the margins around 18% has improved sharply from around 13-14% earlier. On the bottom line as well, we are seeing profitability. So you have you look at it here that the EPS is around 24-25 rupees already for two you can say quarters or half yearly, versus a negative 2.9 rupees EPS in the September quarter, as I mentioned that they were going downhill last year. So the numbers are improving and improving sharply. Hopefully, they will come out with around 100 rupees of, 55 rupees of EPS this year. So on that basis, the stock is not ultra expensive. It is reasonably priced, I would say. If the numbers continue to be good in terms of balance sheet, they have very good reserves of around 8,500 crores with them. Uh, and the shareholding pattern gives you a complete idea. So you have FIIs that the shareholding dipped from around 23.7 to 20%, 21% has gone up again in the September quarter. DIA holding has remained robust. Public shareholding from around 19-20% has gone to 17%, which is a good sign that large investors are getting into the stock. Even in that 17%, around 2.5% is with the large investors. So only 14.5% you can say is the free float in the company. A top notch pharmaceutical API company, a generic company in there, and that has global presence. And with US recovering, Europe recovering, US recovering in terms of, you can say, demand, I think pharma and IT should do well. So this is one of the picks out of the five, Glenmark Pharma, for the next at least 3 years, 3 to 5 years time frame, can do extremely well even from these levels. Second in the list is Ono Minda. Now, why I picked this stock is that it has outperformed in a difficult market scenario for the industry. Auto industry is going through a lot of pain for the last couple of years, but the stock has performed well. So over the last 3 years, if you see from March 24 onwards, the stock has performed extremely well. The numbers are pretty good. So this is basically an auto ancillary company and a manufacturer and supplier of automotive solutions and systems to OEMs, and they have you can say a number of brands in four-wheelers, three-wheelers, two-wheelers, etc. And they are into, you can say, processing and now producing products for the EV as well, for electric vehicles as well. So the company currently has a revenue breakup uh, just like this. So switch segment is around 29%, lighting is around 23%, and casting is around 19%. So majorly from switches and lighting that their you can say revenue comes from. Bajaj, Honda, motorcycles, Hero Motocorp, Royal Enfield, Yamaha are all their customers, and they are getting more orders and expanding into that EV space. So very robust company, very top notch, you can say, management, and the stock and the performance of the company has been pretty good in a very difficult market. So in the September quarter, they did 4,200 crores of sales versus 3,600 crores. That's a 20% jump in sales, which is extremely good considering the kind of difficulty that the auto sector is facing at the moment. From 400 crores of operating profit, we have gone to 480 crores. Margins have remained steady in a difficult environment, 11%. And so I believe that this is one of the companies uh, that could do appreciably well once the cycle turns around. It would go up very quickly. A mid cap company, yes, it's a 60,000 crore market cap company, but can easily eclipse something like a Motherson Sumi, which has a market cap of over 1 lakh crore or so. Uh, so if you look at it, numbers are good. And if you look at the shareholding pattern, 68-69% is with the promoters, 9.7% is the FII holding. uh, DIA holding has dipped a bit from 17 to 15%, but FII holding at the same time has increased from around 6% to 9.5, 10%. And public shareholding has declined over the last 3 years from around 10% all the way to 6.3%, which is again a very good sign that not a lot of, you can say, public shareholders are in there. So robust company, large investors invested into the stock. FII, DII holding pretty robust. The company should do well. I think the turnaround in the auto segment should take place over the next 1 year. So next 4 5 years could be pretty good, and we are getting this stock at reasonable valuation. So if you look at it on a PE basis, we are seeing that it's trading at around 60-66 times. On a 5 year, you can say, assessment, it's 60 times is the average or median PE, and the stock is trading at around 66 times. So 10% decline from here will be very attractive, but one can, on all these stocks, one can probably stagger the investment over the next 2 3 months. The market could be up and down till March. So over the next 3 months, one can stagger investment into these stocks and hold it for the long haul. The third in this list is Sudarshan Chemicals. Now, this is a company that I hold in my portfolio, so that's a disclaimer. At the moment, I do hold, so that's a disclaimer from my end. 8,000 crore market cap company. PE looks stretched at around 58, but they have now acquired a company in the chemical space of their domain, which is more than their size. And now what it has transpired into is that Sudarshan Chemicals would end up becoming, once everything gets formalized, eventually after that acquisition, Sudarshan Chemicals could end up becoming the second largest, you can say, manufacturer of the chemicals that they produce. They sell a wide range of organic and inorganic, you can say, pigments, and it is a pigment company that I'm talking about. And so they also manufacture other sorts of, you can say, pollution control equipment, size reduction equipment, etc. Basically, the company is the third largest pigment manufacturer and will become a larger pigment manufacturer with that acquisition. So that's the main thing. In terms of geographical split, domestic is around 58%, but export is 42%, and it exports to around 85 plus countries. With that acquisition, uh, the exports would increase even further. Uh, the stock has done extremely well over the last 3 years or so. Uh, the stock has gone up sharply, more than doubled over that period, nearly became 3x. And in terms of numbers, it is also doing decently. So 700 crores of sales versus 600 crores, so that's around 16% jump. In terms of profitability, if you look at it, from 66 crores the profits have gone to 94 crores. So that is a 50% jump, nearly 45% or so. And margins from 11% has grown to around 14%. And even with a negative other income of 6 crores, the profits were much better in the September quarter, 30 crores versus 18 crores. If you would have included that 6 crores other income, the profit would have been seen as doubling from last year same quarter. And so numbers are very strong. Again, chemical industry has gone through a lot of pain over the last 6 years or so, not just the last couple of years, but over the last 7 8 years. uh, the industry has gone through a lot of pain, and now it is recovering. So I believe that this is one of the plays that could do extremely well over the next 4 5 years. Promoter holding around 30 31%. FIA holding has consistently increased from around 3% in 2022 over the last 2 years to 8.5%. DII holding is around 20%, and public shareholding has come down from around 47% 2 years back to around 41%, which is a very good sign that large investors, stable investors, are invested into the stock. Even in that 41.3%, there are around 15%, you can say, strong individual investors that have bought into the stock. So overall, very interesting play from the chemical space. A safe play in the small cap domain, but again, keep stop losses and do your own research to before getting into small cap stocks, but looks pretty decent. Fourth in this list is Surma SGS, and we have seen Dixon Technology, we have seen Amber Enterprises, Avalon Tech, etc., doing extremely well. Surma SGS is in the similar space, but what I liked about the stock is that over the last year or so, from October of 23, when it was trading at around 670 rupees, the stock is still yet to make that high, although other stocks have gone up very sharply. Yes, it is trading at 100 PE, but others are trading at 200, 250 PE. We have seen that. So in that respect, Keynes Technology, for example, is trading at 250 times. Yes, the business is different, but in a similar sort of space. So incorporated in 2004, Sirma SGS is a Chennai-based engineering and design company. What does the company do? The company provides integrated services and solutions to original manufacturers from the initial product space. So, uh, what are their product portfolio? Printed circuit boards, assemblers, they have radio frequency identification products, RFIDs as we call it, electromagnetic and you can say electrochemical parts, etc. Uh, if you look at the industry that they operate in, it is automotive, consumer, healthcare, industrials, IT, railways, everywhere. India corresponds to around 70% of their you can say revenue split. 15% comes they export to Germany, and rest of the world is around 10%. US is around 6%, which is less. In terms of clientele, if you look at it, TVS, AO Smith, water purifiers, etc., water products, Robert Bosch Engineering, and there are other clients in all spaces that they are working in. And I believe that the numbers are only going to improve with the kind of investment that the and the sops that the government is giving here in India to this industry. If you look at the numbers, 71 crores of operating profit versus 50 crores, that's a jump of 40%. Margins expanded from around 7% to 9%. And eventually, the profitability was pretty good. From around 37 crores, it jumped to 51 crores. It's again a 35% jump, but other companies are doing 50, 60, 70% profit growth at the moment. And I think the traction will begin to, we'll see the traction taking place in Surma as well once the automobile industry also performs. In terms of shareholding as well, here it's decent enough for a small cap company. Promoters 47%, FIDI holding is in there around 16% combined. So interesting play. I was trying to find something in the electronic space because I believe that this momentum could continue. Maybe a little bit of correction could take place. So be careful about that. Again, for that, stagger your investment, but the company should do well over the next 4 5 years. And the final stock at the moment that I have found out is InterGlobe Aviation. I wanted to give a touch in this five stock kind of a portfolio of a large cap, and InterGlobe fits the bill in here. 180,000 crore market cap. You can say, sorry, 180, 1,80,000 crore market cap at a PE of 26. Uh, it went through a difficult phase during you can say the last 3 months or so. In September it was at around 5,000, and in November it fell. In 2 months it fell from 5,000 to around 3,800. So there was a decline of 20% in 2.5 months, but the stock has recovered and recovered sharply, and the reason for that is that investors, large investors, promoters started to sell the stock at those prices. And I think promoter selling is virtually over, and large investors have got into the stock. One of the probably the only company that is producing such numbers as we are seeing it here. 17,000 crore sales versus 15,000 crore, decent jump. 2,200 crore operating profit, dipped to around 1,600 crores because the margins dipped, ATF prices rose, and there were other factors as well. But if you look at how the airports are jam packed, and people are flying much more than they were, say 3 4 years back, over the next 5 years this could be big. uh, I believe sooner rather than later the stock should be trading at 10,000 rupees and then going beyond. I don't have a target in mind for the next 5 years, but it's a good investment bet for that period. In terms of shareholding pattern, if you look at it, promoter shareholding has reduced from around 72%, 75% earlier, 2.5 years back, all the way to 49%. But you have the FII holding that has increased from around 16 17% to 25%. DII holding has gone up from around 5% to 20 21%, and public shareholding has remained steady. So it was very less, around 2%, has gone to 4.6%, but not a lot. So large investors are still invested into it. FIDIIs big time have got into the stock even though promoters have sold. I think the momentum could continue. I would say around 4,000, 4,100 would be very good levels to get into if you get it. So again, stagger your investment. On a bad day, get into the stock, say a 5-7% decline, and hopefully over the next 5 years, it should be doing well. So these were my picks, the New Year picks for the next 5 years, 5 picks for the next 5 years. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.